Bitcoin is currently retesting the last leg of support between 27,800 and 28,000. A loss of this level could result in an extended crash below 26,000, possibly as low as 25.2. In today's video, we're going to be discussing the short-term price action and the possibility for a bounce at this level. Let's get into the video. Okay guys, welcome back to the channel. I hope you're all having a fantastic day today. We're here to discuss Bitcoin on the smaller time frame and the macro chart. Bitcoin has completed a correction towards the lower section of the current macro horizontal support / resistance between 28 and 30,000. A loss of 28,000 could be catastrophic and result in an official rejection from this higher time frame resistance, which could push the price to 25.2k. In today's video, we're going to be discussing what the next short-term move is, the possibility for a bounce from this 28k support, and of course, what will happen if we do continue toward the downside. We're discussing targets, triggers, and so much more, guys. Hit the comment button if you've got any questions, leave a like, and of course, subscribe to the channel for daily videos on Bitcoin. We focus on the facts, the data, the technical and structural analysis, and of course, we leave out all emotion, BS and hype. Pure raw facts here, guys. If you're interested in getting up to date with more of our content between our videos, you can find us on Telegram. The second link down below. You'll get access to a variety of different charts, updates, analysis, information, educational posts, news events, tips and tricks, and just so much more content in here, guys. I highly recommend. It takes 2 or 3 seconds. Click that subscribe button. You'll get access to all of this content. If you're interested in supporting the channel, do so by clicking this link over here to sign up to Bitget, and of course, join our VIP trading channel. If you're interested in exact trading entries, targets, stop losses, etc., exclusive analysis for altcoins, for Bitcoin, for Ethereum, shorts and longs, including our group chat. You'll also get access to our group chat, which includes a trading and chart chat, a general chat, and of course a help and additional video chat. So much content there, guys, so much information, so much beneficial stuff. You can also find our entire trading track record right over here. Go ahead and contact me by clicking this button here to send me a message for more info. Let's get into the video. So currently the market data, Bitcoin is up 1.05%. That is completely incorrect. Bitcoin is down 0.76% for April, so we're officially in the red. Obviously, quite an aggressive correction in the last 32 hours, bringing Bitcoin from around plus 7% to negative 0.7%. 24-hour volume is down 22% and liquidations are down 54%, but overall liquidations are still very high at 136 million. Looking at the volatility index, we can see the overall 30-day volatility has still come down. We're sitting just above 2.16, and of course, the 60-day volatility period index is 2.91, dropping below the 3% level. Looking at liquidations, as you can see in the last day, we saw some absolutely massive liquidations here in longs. In fact, being one of the largest days since largest day of the year actually in terms of liquidations for longs. And of course, in the last 24 hours, we are still seeing some of these early longs jump in and get liquidated. A lot of shorts have been printing. We haven't seen a lot of blood from the shorts, so maybe it's time for a little bit of a short squeeze, and we're discussing that in today's video. So the DXY and traditional markets, let's take a look. We had confirmation that the DXY double bottomed. We had our double bottom formation over here, so we had 2 local lows. We had confirmation of that through 3 points. We had obviously horizontal support represented by the green box. We had a bullish engulfing candle on the daily, and of course we broke our downtrending resistance. So we had 3 points of confirmation. Therefore, the probabilities of DXY continues upwards here is likely. However, it looks like it is just pushing sideways. It is consolidating. It is definitely struggling to continue upwards. And again, this is mainly due to the fact of the economic environment, with interest rates potentially coming towards a pivot and falling, the money printer turning back on, all those additional facts we'll talk about later on when we get closer to FOMC and of course CPI. But there is definitely an overwhelming assumption that the interest rates will be coming down, and if that does occur, then we are going to see the dollar drop down slowly. So as long as that perceived systematic risk in the market continues to fall, we will naturally see the DXY underperform in terms of these breakouts and overperform in terms of these drops, and that of course could be potentially negative for the stock market or positive for the stock market depending on the way the DXY goes. If we look at the stock market over here, At the S&P 500, we can see we are still struggling to retest and break through this current resistance. This is around the 340-day resistance over here that if we do get above, we'll be flipping high time frame bullish. You can see, excluding this deviation, we can see we've had numerous retests of this level over the last couple months. We're looking at 12 months now. A break out of this level will result in a strong push upwards well over the 4,300 level, or into that range at least, to retest these highs over here. Of course, if we do fail to break above and we do see the DXY rally, we could see an extended continuation or a crash back to retest this potential neckline of support around 4,050, and of course a loss of that to retest our uptrending trend line. Looking at the Dow Jones, a very similar position here, guys. If we do see the DXY crumble, we will see a continuation upwards, potentially to about 36,000. A loss of that level on the DXY could result in a push downwards and support at this local neckline. And of course, if the DXY does continue upwards, we are going to see that extend down to our dotted line. And the same goes for Bitcoin, guys. If we do see the Bitcoin price action break through 30,000, we're most likely also going to see the DXY crumble, right? If we look at what drives macro price action, it kind of is segregated into three different groups. We have economic drivers, we have political drivers, and we have social drivers. The main one for macro price action being economic drivers, and the main economic driver for risk assets is interest rates. So we do have to keep our eye on interest rates, as we've been saying this entire time. As we've been saying since we bought all the way back down over here, we do not need to see a Fed pivot for interest rates to for the asset prices to rise. We will see asset prices rise well before a Fed pivot, because asset prices move based on perceived systematic risk. And this is where a lot of people get it wrong. They say the economy still looks bad. The markets are looking great. What is happening? How are the markets rallying when the economy looks bad? Well, the market is not a direct reflection of the economy, and metrics are used to measure the health of the economy isn't the same metrics are used to measure the health of a market. Markets move on perceived risk. The economy is a direct reflection of actual risk. It's completely different, guys. So as long as the actual risk is perceived to be falling, the markets are actually going to react positively. And we'll discuss this in a whole lot of detail. Again, I have background in economics. We've talked about this so many times on the channel, and we'll discuss it more in a future video for you newer viewers who want to find out more information about it. But let's go ahead and get into Bitcoin on the short-term time frame. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. As we can see, Bitcoin has had an extended crash. We said in yesterday's video, we do have a major current uptrend. And this uptrending support line over here has resulted in we're looking at about nearly a month or a little bit over a month of support for the current uptrend. We actually broke it down from this uptrend yesterday, resulting in a continued crash toward our next lower support. This next lower support being the 28 to 27.8 level, the 28K to 27.8K level. And this is a very significant support, as if we look at our higher time frame chart over here, we can see this level is in fact blocked out. This is our high time frame 30 to 28K major horizontal yearly resistance / yearly support of the prior bull run cycle. An incredibly important level. In fact, it is a high time frame trigger even on the 4-year cycle, as well as a lot of his macro indicators. We're using 30K as a high time frame trigger for a macro continuation up. It's not a high time frame continuation. We've been in a high time frame reversal for a while. We've been in a weekly, a daily reversal, a daily uptrend, a weekly uptrend for quite some time. We're talking about a monthly plus uptrend that is going to require a break over 30,000 on the monthly chart to initiate. We've been saying this for a very long time, guys. Been paying attention to the channel, you would know we bought all the way down at 16.5 and we sold at 30,000, expecting this correction. So here we are. What do we expect to happen next? So let's quickly zoom out and discuss what we're looking at. Current uptrend is our uptrending support line. We have our major support over here, and I have risk of high time frame correction to 25k if lost. And the reason we say that is because, again, guys, if we look at this macro chart, below this 28k level, we have very little major support. We're not talking about minor support. We're not talking about minor horizontals. We're talking about major support zones. We have very few major support zones below here until we reach around 25.2 to 24.4. Again, you can back check this, you can cross-reference it, and most importantly, look at the volume data to see. We can see on the VRPV, as soon as we lose around 27.8, we have a significant crash in the VRPV to around 25.2. This represents that we have decreasing historical orders within this range. If we have decreasing orders, we can assume we have decreasing resistance as we push through. If we have increased volume through a range of decreased resistance, the volatility is going to, by turn, increase and the speed of the price action will increase. Therefore, the velocity of the move below 28k towards 25.2k could be exceptionally fast if we lose our level. Again, this isn't just made up stuff. This is what the charts are saying, guys. Be aware of a drop below 27.8 because if we do see it, we could see the velocity of the price action spike and we could see an extended correction that actually occurs quite fast. And we'll say it again, guys. If we do drop down to 25.2k, we are technically still bullish, right? The reversal structure is still in play. The uptrend is still very much in play. And of course, we are not really at risk of this higher time frame downtrend yet. The only time we really get worried about this uptrend being lost is a loss below this 24.4k. If we lose 24.4k, being this level over here, we will have deviated and broken back below a 281-day long support. This could result in an extended continuation back down to the lower levels, and this is where we are concerned. Over here, the break below 24.4k is where we are now concerned about the health, excuse me, of the current reversal structure and uptrend we have developed over the last 2 months. Until then, every correction should be considered a healthy correction. So let's get back into the smaller time frame, discuss the next move, and then we'll come back and look at all of our technical indicators on the weekly, on the monthly, and of course on the daily, and discuss how the trend is actually looking now that we have had a correction. So let's start on this time frame here, guys. As we can see, guys, we have a potential falling wedge structure developing. Now, we had a falling wedge structure develop for quite some time. We had a false breakout yesterday around about this level, but we have pushed down a little bit further. So we do have a falling wedge structure developing on the hourly, on the 30-minute, on the 15-minute, etc., etc. We are looking for this to be a reversal structure. So what does a falling wedge tell us? A falling wedge tells us a few things. Number one, we have decreasing volume. Okay, cool. We have decreasing velocity, we have decreasing liquidity, and we have decreasing volatility, sorry. So all of this tells us we are in a bullish consolidation as we are in a decreasingly aggressive downtrend. The moves in this downtrend and of course the slope of the downtrend is starting to decrease, and therefore we are in a bullish consolidation. If we are in a bullish consolidation, we do expect a reversal to occur from this consolidation upon a breakout. How high could the breakout take us? Let's take a look at our measured move. Our measured move taking from the first point of retest to the second point of retest, applying that to 2 points. Point number one, this area, the low retest, okay? This will take us just below 30,000 to retest around 29.2 to 29.1 being the next resistance. And of course, if applied to the breakout point, it could take us up to around 25.6. So a bullish reversal is definitely possible here. And this is going to be the most probable and of course, the best thing for Bitcoin to do here in terms of the correction, in terms of the trend, as like I said prior, guys, we are retesting now an incredibly important level. This 28 to 27.8 level is incredibly supported on the macro, and if we do lose this level, we are at risk of a continuation. So the bulls do need to defend this level. We do need to see a bounce from this level that pushes us back over the current uptrend. This current uptrend, this diagonal trend line, has to be reclaimed for this trend to start looking healthy again. Until that happens, we do have a potential to rally upwards, retest this zone, reject, and come back down, guys. So short term, I am expecting a strong positive reaction from 28,000. I do not think we're going to let go of 28,000 that easily. I think we're going to bounce from here a little bit. Best case scenario, we break above 29K, we go back into this trend and we climb upwards. Worst case scenario, of course, on the uptrend, we come up, we retest and reject from this level, breaking back down. And of course, if we do see a loss of 27.8 thousand, we are going to see an immediate drop to around 26.8, and of course, a potential continuation down to 25.2. So that is what we're looking for in the short term from a structural level. Let's take a look at technical indicators on the short term and discuss the probability now of this potential breakout. So let's bring up the RSI. On the 30-minute chart, we can see we have, of course, got our trend line over here. We have our local top over here. We have our retest point. We can drag our RSI across. So what do we see here? We see a shift in momentum that could potentially occur. And again, we're using the price action chart to validate these peaks on the RSI to determine where the trends are on RSI. Because again, the RSI doesn't reflect price action. It reflects velocity, momentum, and speed. Okay, it doesn't reflect price action. We can see local top here, retest of trend corresponds to this point. Local top here, retest of trend corresponds to this point. We can see again, these local bottom points, okay, they correspond to the potential trend line we can draw in at the bottom here. So we do have a very clear support line and resistance line on the RSI. Now, these aren't traditional support and resistances. In fact, these are momentum triggers. By momentum trigger, I mean a point at which the momentum shifts from negative to positive. A break through this level will result in a positive shift in momentum. If we have a positive shift in momentum and we have a breakout of price action, what does that do? Well, it validates the breakout. It confirms that we have the momentum and we have the breakout. This could push the price higher. If we do not see both of these things occur, the possibility of a fake out is there. So what I'll be looking for is a break of the momentum, a break on the RSI, a break of the trend line for safer entries for a long, potentially continuing back up to this range. I could look for a more risky entry if we just see one of these two things occur, being the price action breaking out without the RSI or the RSI breaking out without the price action. This could be a preemptive entry, but of course it will hold a high degree of risk, but it will allow you to get in sooner. So again, you have to make up that mind yourself depending on what your risk tolerance is. Of course, like I said already, if we do see a crash back towards this level, we are still respecting this downward trending support line. So we could potentially see something like that and bounce back up, although the possibility is quite low, as we already do have our 5 points. We have point number 1, point number 2, point number 3, point number 4, point number 5. We only need 3 on one side and 2 on the other side to validate a falling wedge structure, and therefore the probability of a continuation back down is much lower than the probability of a continuation up from this breakout point. So watch the short term for a reversal. We could potentially see that, and again, like I said, this is going to be the most important level and best level for reversal to occur if it does, as we are now defending the 28,000 level, which of course now you know is the most important horizontal support in our current range, because if we do lose this level, we are going to see an extended drop back down. As you can see, this horizontal level represents a yearly support level for the prior bull run, and now is a yearly resistance. So it's a level to break, we do need a monthly candle close. So let's go ahead and do a TA on the daily, on the weekly, and we'll finish up with a TA on the monthly, and then we'll finish up the video, guys, and leave it for you guys for the rest of the day, and we'll see you again tomorrow with it. So daily chart, like I said yesterday, we are starting to see these bearish divergences play out. In fact, we've been seeing these bearish divergences for quite some time. Now, I do think these bearish divergences have played out. Now, I do not expect the price to continue downwards any further, irregardless of what these indicators are saying, until this horizontal level is lost. Horizontal levels hold, or should I say, deserve a higher level of significance than our indicators. So indicators paint a narrative, but the price action determines direction. So when we're at this level here, although we've seen a bearish divergence, we have to assume for now that this bearish divergence has played out and resulted in this continuation downwards. As I've been saying already, we have been seeing this weakness develop over the last few weeks. This bearish divergence was obvious well before this crash, and we warned you about it. Now we're saying we're at support. The indicators are now lagging on this crash. They are suggesting we're continuing downwards. They are bearish, but whilst we hold 28,000, we do have to understand that they can flip around on the short term, and that could translate to the higher time frame and result in a bounce over here. So definitely keep that in mind, guys. Do not look at the high time frame indicator and say high time frame indicators are bullish and therefore I'm bullish. It doesn't work like that. I've said this entire time. I've said at the top at 64K, I've said at the bottom at 16K, I've said even over here, the high time frame indicators are going to be lagging, they're going to be misleading, and if you go off high time frame indicators for short-term decisions, you're going to be wrong, because by the time they look bullish, the correction or the move upwards have already occurred. By the time they look bearish, the move downwards has mostly already occurred, okay? Wait for bounces, wait for structural confirmation before you enter. Use technical indicators as confirmation / validation of your decisions, not for decisions themselves, okay? Keep it nice and logical. So, RSI, markets over B, of course, not looking too healthy. If we extend that over now to a 3-day chart, we can see a very similar thing. We've seen that breakdown on the 3-day. We've seen that market over B print a double red dot, again signifying a shift from positive to weak positive momentum. I would like to state that although we are seeing these corrections, we still do have positive momentum. We can see that the market over B is still above this neutral level, okay? We are above that midline, therefore this entire range up here is actually positive. We still have positive momentum on the 5-day, on the higher time frame, we have positive momentum. However, the red dot does signify we have a shift from strong positive to weakening positive momentum. So now we have falling positive momentum. This could result in a continuation toward the downside on the higher time frame if of course $28,000 is lost. To show you an example, the last time we saw this occur was up over here. And this isn't me saying we're going to see it again, but it's showing you guys that these high time frame momentum indicators can shift direction on the higher time frame. So if we start to see on the higher time frame a shift from strong positive to weak positive, that could be very alarming if we start to now lose major supports on the horizontal scale, because that then validates these indicators more and results in a possibility where they can be extended over a higher time frame, as a short-term time frame is now kind of confirming that high time frame narrative. So do watch out for that. It's something to concern about. Looking at the 12-hour chart, break it down, we can see already that momentum did shift to the negative on the markets B. We can see we dropped under the 0 point, so we are on the negative. Now, if we keep breaking it down to a 4-hour, we will see that momentum is starting to shift upwards. Again, we can see we're very much negative here. We've had that green crossover, and if we drop down to an hourly, we will notice that momentum is starting to shift upwards. So over here, we can see we've had a few green dots over here signifying a shift from strong negative now to weakening negative and weakening negative momentum, while in a decreasing trend line in a falling wedge is a sign of a potential bullish reversal and bullish consolidation. So keep your eyes on that, guys. It is looking half decent for a reversal. Looking at the higher time frame, markets over B over here, we're not going to look at, but we're going to look at the Gaussian channel, inch-moving cloud. Gaussian channel, I did say already, we do need to break over this high time frame resistance for a macro continuation upwards. Every single time we've broken through the upper band of the Gaussian channel, we do generally continue upwards, as it is a major high time frame trigger point or shifting point. Until then, it is going to be acting as a major resistance. Another indicator I want to look at is the Bollinger Bands. You've been paying attention, we said the Bollinger Bands were at the top end of our Bollinger Bands, and as we approach the top end of the Bollinger Bands, we are likely to see a rejection. Now, the only time we kind of continue above the top is when we are in aggressive uptrends. But we're not in an aggressive uptrend yet on a macro scale, as we haven't closed above 30,000. Above 30,000 is when the aggressive macro uptrend develops, not below. So we aren't in an aggressive macro uptrend yet, and that was one of the reasons why we said we do have an increased probability of a rejection from 30,000 to 28,000, and that is why we sold at 30,000. I hope you enjoyed today's video. Watch the short term, watch that falling wedge structure. A breakout on the short term could be possible. Will the breakout save Bitcoin? Will it result in a strong bounce back above that trend line? Hard to say for now, but at least you can get a nice little scalp trade out of it, and we'll review back on the data tomorrow. Thanks for watching. I'll see you guys tomorrow.